All right, let's dive into MSCI's Q3 2024 earnings call. We've got some excerpts from the transcript, and we'll look at what the analysts were asking the CEO and CFO, and look at those juicy details, the wins and losses. Our goal today is to figure out what really matters from this call, for you as an investor.
Yeah, and what's interesting is how MSCI is really kind of walking this tightrope between, celebrating these big wins, but also kind of acknowledging some, serious headwinds. So, for example, you've got revenue up by 16%, adjusted earnings per share that's up 12%, and free cash flow is up a whopping 46%. But they're also seeing some weakness in ESG and climate sales.
So it's like firing on all cylinders, but also navigating some pretty choppy waters at the same time. Let's break down their business model for a second so we can all understand where these wins and losses are coming from. They have three main revenue streams, right?
Exactly. So first you've got index licensing. This is where they're the brains behind those ETFs that you hear about all the time. They create the indexes and they license them out, and these funds are built on these indexes.
Yeah.
Then you've got their analytics arm, and that's where they're providing the tools and data to help investors understand risk and performance and more. And then finally, there's the ESG and climate segment. So that's all about, giving investors data and ratings to help them make more sustainable choices.
So really a mix of, providing the building blocks for these investment products, but also the tools to analyze them. But this earnings call also reveals some pretty significant threats to this model.
Yeah, the biggest one is the struggles that active asset managers are facing. These are your traditional stock pickers. And they're facing fee pressure, they're facing outflows, they're facing competition from passive strategies. And this is a problem for MSCI because these active managers are a big chunk of their client base. So if their clients are hurting, it's going to impact MSCI's bottom line.
It's like a ripple effect. So it brings up a pretty crucial question. Can MSCI pivot fast enough to make up for this shrinking client base? It seems like they're off to a good start with those forays into wealth management and private assets. But are those enough to offset the decline?
That's what the analysts really wanted to know. And they didn't hold back at all during the Q&A. They grilled MSCI about pricing power in this tough environment. They dug into why sales are taking longer to close. Are we talking about just a temporary blip, or is there something more serious going on? And they even pushed on whether competitors are starting to, eat their lunch a little bit.
Sounds like a pressure cooker.
Yeah.
What do the analysts want to know specifically about pricing power, though? Are they worried that MSCI can't keep charging, top dollar in a world where everyone is watching their budgets?
That's exactly it. You have to remember that MSCI has historically enjoyed premium pricing because of their dominant position and the specialized nature of the data and analytics they offer. But are those days over? Analysts wanted to know if they're going to have to start being more competitive on price, maybe even offer discounts to keep those clients coming in.
So did MSCI give them a straight answer? Or did they kind of dance around the question a little?
I think they were trying to be diplomatic. They emphasized the value that they provide, their long-term view, but they also admitted that they are moderating price increases. And in fact, the contribution from price increases to their recurring sales is actually down slightly from a year ago.
Right.
So reading between the lines, it sounds like they're feeling the heat a little bit.
Okay, so that's pricing power. What about those sluggish sales cycles? What kind of insights did the analysts dig up there?
Well, they point to a couple of things. First, there's all those mergers and acquisitions happening in the financial sector. And that's, it's having a ripple effect. Because when these companies combine, they have to reassess all their vendors, and that can really slow down decision making. And second, there's just increased competition out there. The data and analytics space is getting crowded, and that means MSCI has to fight harder to win deals.
Right, so it's not just about clients being cautious with their spending. It's about MSCI adapting to this changing competitive landscape. And speaking of competition, the analysts seem particularly interested in how MSCI stacks up against its rivals. Did they throw any shade?
They were pretty diplomatic, as you might expect. They highlighted their strengths like the index business, their risk models, and their expertise in climate and ESG. But they did acknowledge that competitors are getting aggressive on pricing, and that's putting pressure on their own margins.
That's a tough spot to be in, for sure.
Yeah.
They need to stay competitive, but they also don't want to trigger a race to the bottom that could end up hurting everyone. So what's their strategy for navigating this?
Well, they're betting big on innovation and expansion. They're putting a lot of resources into technology, including AI, to enhance their data and analytics capabilities. And they're also looking for growth in new areas like wealth management and private assets. So they're trying to diversify their client base beyond those struggling active managers.
It's like they're trying to build a bigger boat at the same time as they're learning to navigate, rougher waters.
That's a great analogy. It really is a delicate balancing act. But here's where things get really interesting. Despite all these challenges, their future outlook is surprisingly optimistic in some areas.
Oh, really? Tell me more. What are they so optimistic about?
Well, they believe that index investing is going to continue to grow. And that's obviously good news for their core business. They also see huge potential in those new areas that they're expanding into, like wealth management and private assets. They think those markets are ripe for the kind of data and analytics solutions that they offer.
So they're not just playing defense, they're also going on offense, trying to capture new territory and create new revenue streams. But let's be realistic for a second. If those active asset managers continue to struggle, it's going to be tough to fully offset those losses, right?
Absolutely. And that's the big caveat in their outlook. They acknowledge that their success hinges in part on a rebound in the active management space. They're not writing it off completely, but they're also not expecting it to be the growth engine that it once was.
Yeah, that makes sense. It's all about adapting to the new reality of the market. But there's another wild card we haven't talked about yet. The future of ESG and climate sales. Demand has cooled off. And that raises some big questions about the long-term viability of this segment for MSCI.
Yeah, it's the million-dollar question hanging over the entire investment industry right now. Is ESG a passing fad, or is this a fundamental shift in how investors approach risk and return? MSCI seems to believe that it's the latter, but they're also being realistic about the near-term headwinds. They're continuing to invest in their ESG and climate capabilities, but they're also acknowledging that this segment might not be the rocket ship they once thought it would be.
So where does that leave us? We've explored their business model, the threats they're facing, those grilling questions from analysts, and their somewhat mixed outlook for the future. What's the big takeaway for our listeners? What's the so what of this deep dive?
It really is, will they pull it off? Can they maintain their position while this huge shift is happening in their industry? It's a big question, and I think this earnings call provides some clues. They're trying to balance this optimism for the future with a realistic assessment of the challenges that they're up against. So they're betting big on index investing to keep growing. And they see, a lot of potential in these new areas. They're moving into like wealth management and private assets.
So they're kind of acknowledging that the ground is shifting under their feet, but at the same time, they seem confident they can build something new and even stronger on top of it.
Exactly. And, to their credit, they're not shying away from the challenges. They're admitting that, a rebound in active management is going to be crucial for their long-term success. And they're recognizing that the future of ESG and climate investing is uncertain. And so they're adjusting their strategy.
And this actually brings up a really important point for anyone who's following MSCI or frankly, anyone who's interested in the future of investing in general. Is ESG a genuine lasting trend, or is it just a buzzword that's kind of fading away?
Yeah, it's a question that has some pretty far-reaching implications. MSCI seems to believe it's here to stay, but they're also tempering their expectations. They're investing in those ESG and climate capabilities, but they're not expecting it to be, this runaway success that they maybe once envisioned.
So MSCI is in this really fascinating position. They're this dominant player, but they're also a company in transition, adapting to this changing landscape. So what does this mean for investors? What's the key takeaway from this deep dive?
Well, the key takeaway, I think, is that MSCI's journey gives us this really interesting glimpse into, the forces that are shaping the future of finance. Their successes and their struggles are kind of a microcosm of what's happening in the broader industry. We're seeing the rise of passive investing, the decline of traditional stock picking, these new players coming in wealth management and private assets, the uncertainty surrounding ESG, and just this constant pressure to innovate.
It's a dynamic and often unpredictable environment. And I think for investors, it highlights how important it is to stay informed, understand these trends, and carefully evaluate the companies that they're investing in.
Exactly. So as you continue to follow MSCI or really any company in the financial sector, keep these broader trends in mind. Ask yourself, how is this company adapting to this changing landscape? Are they investing in the right areas? Do they have a clear vision for the future? Those are the kinds of questions that are going to help you separate the winners from the losers in this, exciting and ever-evolving world of finance.
And on that note, we're going to wrap up our deep dive into MSCI's Q3 2024 earnings call. We hope this has given you a clearer picture of the company, the industry, and all those forces that are shaping the future of investing. Keep asking those critical questions. And remember, knowledge is power,